Everybody, what's going on? Fabian, founder and president of the Node House, creator of the Resourceful Real Estate Academy. The one thing I think any investor should know about is what I'm going to talk about in this video. The one thing, right? I think super important. I've touched on it now for years. Many people lose track of it because maybe they get caught up in the exuberance of, asset prices rising in a certain market, or if, you're a stock guy, you might think stock market's doing fantastic now, or real estate's turned a corner. None of that matters. This is the one thing that does matter, however. All right, so top investments for a poll that was done by Gallup, right? They interviewed 1,005 adults, investors, asking them, what do you think's the best investment class? What do you think is, where you should be investing your money in right now? And the answers I thought were revealing. Keep in mind they were from April 4th to April 7th. So I'll cover those answers in just 1 second because they lead to the one thing, which is a trend for, I think, investments moving forward between now and minimum the next 48 months, perhaps even longer. It just depends on some variables, but it is the one thing trend that I call for the next at least 24 to 48 months. First, let me just explain a few things. All around the Western world, really not just the Western world, but even in economies like China, there's a tremendous amount of debt that's been created. I mean, here in America, we have real estate debt still in the trillions of dollars that exists. In fact, it's funny to see when people talk about lack of inventory on the market regarding the housing market. For example, South Florida, for apartment buildings or for just, single family homes. Talk to a lot of real estate agents, they'll tell you, well, there's a lack of inventory to buy short sales or foreclosures or REOs, when just the opposite is true. The truth is, if you know where to look, there's so much inventory still available and so much inventory that's still replacing it. Keep in mind that just Florida alone, 20% of the homes are in foreclosure. That doesn't account for properties underwater or properties that are just 30 or 60 or 90 days past due that are not in foreclosure. And this is the same in the big foreclosure states, whether it's California, Florida, New York, Texas, Las Vegas, or Nevada. I mean, the trend is still, I believe, towards a massive amount of debt. It's not being deleveraged as many people think. It's out there, and it's out there for investors to be able to, A, understand what that means to them as an investor, and B, for investors to almost embrace that as a way of prospering in these economic times. And I think a lot of people are already doing that. So the debt is everywhere. It's all over the West. If you look at places like Europe, they have major debt problems. In fact, they haven't even recapitalized their banks yet. They're creating bad banks to host all this toxic mortgage that's out there, while at the same time, you have all the toxic debt, you have all of these billions of dollars flowing into real estate. More than enough for investors to get on that side of and be able to seize that opportunity, but not enough to buy up all this toxic debt, because again, it's in the trillions and trillions, and when it comes to actual properties, it's in the millions and millions, right? So all this debt's everywhere throughout Europe. It's throughout America. And most investors, most real estate investors don't understand, how do I tap into that? How do I find that debt? How do I be able to make money off that debt? And most investors, whether they're stock investors or real estate investors or commodity investors, they don't know the fundamental driving factors that are driving this economy in order to make the decisions in their portfolio or in their investment criteria to be able to survive, I think, the next 2 to 48 months. Because again, it comes down to one thing. There's one thing driving all investment classes. And I think this Gallup poll points to that one thing. And it touches on a theory that I've talked about not only in my recent micro documentary about the housing market, but in just my commentary for the last few years, which is there's a tremendous amount of debt, and investors are beginning to find asset classes that can protect them from that debt. 25% of the respondents for the Gallup poll, the number one investment that they felt was real estate. Now, it was a close tie to the second one, which we'll cover in a second, but real estate. Why real estate? Why are billions of dollars flowing into real estate right now? Because real estate's a hard asset. Real estate is something that you can touch, feel, you can drive by. It's something that it can cash flow for you. Real estate is something that people can get involved in without having really no experience, being able to get involved with really no money. It's the only asset class. Really, it's probably one of the few businesses or investment. It's the only investment asset class that I know of that people can get involved in and not have any money. I mean, take a real estate agent. Real estate agent gets licensed. They're able to basically become a broker and monetize that market. I mean, that's one example. But think of all the real estate investors that I know, that I've met, that I've worked with, that started out with nothing and were able to monetize this market. So real estate's always a popular investment class, but in the last 5 years, it's taken a huge hit because most investors, like I said earlier, in fact, over 90% of investors don't realize the driving fundamentals of a market, and they lose money, right? But real estate is the number one in this poll by Gallup investors. Where do they think is a bright area to invest? The second one was revealing. It's gold. And these two, now keep in mind, this is before gold fell several $100s, but nonetheless, it still, I think, is more evidence of what I've talked about in my theory, which is there is so much debt globally that investors are moving into real estate and they're moving into gold because they understand it's a hard asset and it'll protect them against devaluing currencies. And it will also, one of them cash flows, the other one protects them against, fiat currencies or should I say the dollar being printed excessively by Ben Bernanke. Therefore, your gas prices go up, your food prices go up. Stocks was number 3. And stocks were actually a little bit up from last year only because the stock market's doing so well. But these people here, I believe, are in the 20th century paradigm because most of these people are probably people that are in IRA accounts, pension funds, and they just kind of grew up in an environment where that's what you did. You hand your money over to a financial planner, he invests your money, and that's how it goes. I think these people are different because this is an asset class where you as the individual have control over everything. Pretty much same here unless you're investing in an ETF, which I would not recommend whatsoever, because ETFs is it's a paper market, if you will. It's really no different than buying stocks. In fact, that's what it is. You're buying stocks. If you're going to invest in gold, buy gold. But see, gold is more like an insurance policy, like, health insurance, life insurance, protects you in case the US dollar, loses a lot of value, or other global currencies, wherever you may be, lose a lot of value. But real estate's the only asset class, again, that has a lot of different characteristics to it that I think make it a very popular asset. Now, all of this points to this one big trend, the one thing that I think everybody should know, where the big money is flowing. It's interesting that I've been making the case that the big money is flowing to real estate, but it's also flowing to gold. In fact, central banks around the world are buying gold in record levels. The Chinese government is mining and buying gold at record levels. So they're all in to gold. With real estate, it's the same thing, though. I did a video just a few days ago about the billions and billions of dollars flowing into gold, flowing into real estate. In fact, in just the last year, close to $5 billion have come into real estate. And over the next few years, they're saying between $8 and $10 billion. This is strictly for distressed, toxic debt, toxic properties purchasing. So, understanding that the one thing, where the big money is flowing, the average real estate, the average person out on the street, people I'd say that probably are invested in the stock market, unless you're a trained stock investor. I know some of those people, they do very well and the markets are up, they're down, it doesn't matter to them because they know what they're doing. But where the big money flows is important because that's an indication, where the asset class is going to go next. That's why I'm so bullish on the real estate market. Not just because I've invested in the real estate market for the last 10 years, because I know that a bunch of hedge funds, private equity firms are buying up real estate like crazy. I'm able to get in front of those hedge funds and basically be able to be just another source to provide them inventory, provide them deals, or partner with investors that I have and be able to provide them with investments that they ordinarily wouldn't have access to, right? That they ordinarily wouldn't be able to get 12, 15, 20, 25, 30% returns. That's why real estate, I believe, is one of the strongest asset classes to be in, because the one thing that matters in any asset class is where is the money flowing? Where is the big money flowing and what's happening? And where is the money flowing out? Last point I'll make is with respect to stocks. A lot of the same billionaires that are getting into real estate and they're getting into gold, they're getting out of stocks. But because pensions and IRAs make such a big, significant, in high frequency trading, make up such a big factor of stocks, it still has a very big presence. But again, the billionaires, many of them, and their own financial advisors or analysts or people that help them and advise them on their funds are telling them the stock market's in a total bubble. So my personal opinion, the one thing you need to know, follow the big money and feed the big money, and you'll do really well in this market. Thanks for watching. I'm out.